What's going on, gang? How's it going, team? Did everyone survive the bear market of February 2021? Let's see, panelists and attendees. How's everybody doing? Hello, Sammy. How are you? Hello, Hildy. Let's see if I can share this, make it a little bigger. Let's see. Hello, Daniel. Hello. Hey, gang. How's everybody doing? Hopefully you survived today. I actually didn't do a whole lot of trades today, believe it or not. I got some pyramids. The tippy top of those were filled today. But usually if you just execute your plan, you usually be okay. Today was no different. What a crazy day to wake up to, right, gang? Where we gapped down to here, went lower, and it looked like the end of the world. And then we reversed and SPY closed up green on the day. Who would have guessed that would have happened? Crazy, right? Let me double check a few of my settings, the user interface. I upgraded to a newer version of Zoom and some things are in a slightly different place. Let's see. I am screen sharing and I am recording. Not sure where I'm recording to, but I am recording. Okay. So S&P 500 looks like it's holding up. Looks like it's doing its thing. So for those of you who were in the day trading rooms, lots of interesting conversation, lots of interesting call outs. Hope everyone smashed some R's, made some good R's. Bearish today. Yours truly does not day trade. So no day trade R's for me today. And I was actually talking to the University of Illinois. I was talking to some entrepreneurs today on a Zoom call. So yeah, so Celia, if you miss a day, the afternoon rooms are recorded. The day trading rooms are time sensitive trades. So we don't really send those out because the move's typically already over by the time you get that video. So Celia, if you're talking about the day trades, I'm sorry, if you're talking about the day trades, those are not sent out. However, you can join live. If you can't make it live, the afternoon rooms are recorded. So, Yep. Now check this out, gang. Look at this on the Qs. So I got my indicator built and finished working for distribution days, which a distribution day, look at all these sell-offs, which tells me it's a little bit choppy, little more on the, yeah, Edward, you're asking for this. So look on SPY, you only have 4, which is kind of a little bit concerning. On the Qs, we got a whole bunch, and I noticed we did close down on the day as well. So today kind of added to our distribution day. And for those of you who aren't, excuse me, who aren't familiar, a distribution day is basically a day where your selling volume exceeds the previous day. And let's see, volume is greater than, let's see, let's do it this way. Today volume greater than yesterday volume, and you're down at least 0.2%. Now, this is kind of an indicator. It's one of those things that says, hey, just be mindful. It's the yellow caution flag at NASCAR saying you may want to slow down a little bit. Yep. So what this is kind of just telling us is to be cautious and careful. And if we were to go back right here, you'll see we still have some distribution days kind of piling up. And as each day has gone on, I apologize, the last few weeks, my indicator was busted, trying to improve it, and I ended up breaking it. So you guys can see as we go on, some of these distribution days are still piling up. The rest of them are falling off. So really it goes back 25 days. And it just says in the past 25 days. Say the look back period, 25 days. and of course we're looking at a daily chart, was today's volume greater than yesterday, and were we down at least 0.2%? And it counts it, right? Now there's ways to get rid of a distribution day. I'll talk about that maybe some other time, but we got a huge list of things to look at today. SPY, Qs, the diamonds, you can see here the diamonds are holding up well. Actually, the Dow Jones Industrial ETF, DJI or DIA, either one of them kind of green on the day. Look at that. And it looks like it's going a little bit higher after hours, but that is a little bit, this is, the distribution days are available on TradingView. I have not yet shared it yet. I think that's what you're asking, Daniel. Yeah, so wage not quite public. There's a few little tweaks I still need to make, but very, very soon, gang, very, very soon. So let's take a look at some tickers here today. This is MOGO. MOGO was a no-go today. For those of you who are interested in this, obviously you can see some kind of previous resistance topping here. I'm not quite sure. Those of you who are interested in this, there's a few things you could do. You could wait for more of a pullback, or because it's hammer-ish-esque, you can do something like this, set up a stop down here, but do a stop limit buy here. So we want the price action to go higher first. So tomorrow, for example, if we set that order up and tomorrow ends up going lower, we're not triggered in, right? And then we can adjust our setup. But that's that looks like an okay thing for me. The challenge of this is that it was a penny stock back a few months ago, and it looks like it's coming to life a little bit. I don't know that we have much. Okay, so it's pretty far away from its long-term moving averages. This blue line, ladies and gentlemen, is a 100 simple moving average. The red line is a 200 simple moving average. Yep. So you guys can see on this day, I'm going to talk about volume a lot today. On this day, the mother of all volume came in, right? And so people who sold during this time, if we close above, as Jeremy says, I call it the volume pinch, where let's say that the bears came in, right? And it looks like they may have won, and just a few weeks later, the bulls kind of take over, and anyone who bought like in this area automatically upside down. And I'm using this volume to draw that level. So if we close above that level, all these people are trapped. I haven't looked at the short squeeze on this, but you can see how if a lot of shorts and the price is pushing higher, lots of people can get trapped, lots of short squeeze action going on. This is not on my list, so this is not on Matt's fly list. It's on my no fly list, or it's not on my list. Let's take a look at one other thing here. Okay, so you guys can see where it would have given us a signal weeks ago to jump in for the 10 EMA, but it looks like it's definitely coming to life since November. It was just kind of a sleepy, go nowhere kind of stock for a while, jumping around between what, $2.50 and $1.50, something like that, but definitely coming to life. So that is a setup. So for those of you who are not familiar with limit buys versus a stop limit, or a limit versus stop limit, a limit order, basically we want it to go higher in our direction first, right? So we're kind of waiting for this to cross our line to trigger us in. However, if it does not trigger us in, if it goes lower, then our order is never filled. Yep. So do you pyramid in specific stock as it goes down based on moving averages? You absolutely can. On this one, we're so far away. What I like to do when I draw my pyramids is I like to straddle, kind of step over both of these moving averages. That's kind of what I like to do. You can certainly do that. We'll see what happens. I'm not sure if it's going to go back down to this level. Obviously, this level kind of hit its head on it before and then broke out, went higher, kind of gapped down today. But that's what I usually like to do, Matt. Great question. Is I like to just kind of step over the 100 and the 200 simple moving average to build my pyramid. Excuse me. You can, pyramid in different levels. There's such a cheap stock on this anyways. I'm not sure if it has options or not, but there's a whole bunch of different things you can do with MOGO. That's interesting because we actually had a different GOGO and MOGO. Okay, so MOGO. Yep. Cool. Yeah. You're welcome. Okay. Let's see. NOVN, penny stock. I don't know if I would touch this, especially pharmaceuticals, gang. I'm not comfortable taking this. You can see it's kind of a high wave candle. You can set up a bracket order where you use a stop limit. If it goes higher, you're bullish. If it goes lower, you're bearish. Not anything I would touch, just my own personal rules. Just because it's a penny stock and it's pharmaceutical. those are two, plus it's not on my list. There's three reasons why I can't take that trade. But to me, it's not, I don't know. It's one of those other stocks that just looks like it's just barely waking up now after a few months, been asleep for, oh, it's been all over the place, hasn't it? Wow. So yeah, not on my, I'm not really seeing anything worthwhile that I would actually recommend, but if you really wanted to, you could set it up that way. I don't know if you guys have ever traded bracket orders before, but usually I've never really had a lot of luck. But usually I'm like, okay, I'll go bearish if it goes below. This triggers in and then it goes higher, right? And so that's kind of my my experience with some bracket orders where you're kind of neutral. It doesn't matter to you whether it goes higher or lower. You just set up a bracket order, an OCO. You're going to be bearish if it's above. You stop limit buys for your for entry bullish, stop limit sells or short for your entry bearish. So yeah. Leah, how are you? Hogo Fogo. So this is CLOV. This is not exactly the most bullish thing I've ever seen in my life. So obviously you guys can see it kind of bottomed out a little bit here, whether that's strong support or not. You know, time will tell. I wouldn't touch this because the earnings right here coming up just in a few days, March 1st. So what is that, next Wednesday? So less than a week away on Clover. If you absolutely wanted to just tippy toe in, you could buy a few shares, hold over earnings if you really wanted to. I'm not seeing any long-term moving averages on this, except for this blue line, which is our 100, because it's still a fairly new IPO. It is not out of its diapers yet. It's still in its IPO diapers. It's not potty trained. It's not a toddler yet. So we don't have that 200 moving average. Okay, next up is ACIC. Oh, look at this, gang. Crazy. Another one of those come to life stocks. ACIC, I had that open earlier. So this is a shell company, also known as a what blank SPAC attack. Yep. Taskia, you like those SPACs, right? So what's interesting is you know, our moderators, I just got the list and it was handed to me, and some of these are some strange ones. Personally, I would not necessarily do anything with it. If we're talking about volume, you guys can see massive selling volume just last week. Obviously, if we were to close above that, which we did, but it didn't hold, you guys can kind of draw some levels here and you can see kind of maybe what that's shaping up to do. I don't know that I would touch SPACs right now. They're wild, crazy, and there's really very little information out about this company. You've seen this, it focuses on affecting a merger, capital stock exchange, asset acquisition, stock purchase, blah, blah, blah. What are you doing? What does this company do? Something with leisure, gaming, hospitality. No idea, gang. No idea. For those of you who want to day trade it, fine. Swing trading, I don't really see any rhyme or reason for why this thing moves just yet. I really don't. So, yep. Nothing I would do on that just yet. Not Yoda. You're not Yoda. So you're GRUB. So electric flight, short trips. You're not talking about ACIC, are you? That's not what you're talking about. What? Because this says it's like a SPAC for leisure, gaming, hospitality. Pedal powered airline. It's the Flintstones, you know, pedaling. Oh my goodness. Wow. Okay, gang, let's move along. We got a big list. So fun times. So the cool part about this is platinum. So you guys can see it's a little bit of a hammer. I could see something like, oops, there we go. I could see something like this where we're going to try to buy half of this candle. There wasn't tons of volume that came in today, which is kind of a good thing. If you're a bull and you got some selling, I would do something maybe like this, where with the stop down here. Again, not on my list, but for those of you who are interested, something like this. We'll see what happens. You could play that way, or you could play a break above that candle with the stop limit order. Either way, depends. I don't know what this company does, but looks like they've kind of chopped around for quite some time through this time frame. Yep. So another one of those just kind of coming to life. I noticed a lot of the tech stocks all look pretty much like this candle today. Almost every single one of them looking like this, either white or a black candle. On this is the trade desk. So they do advertiser. I like trade desk long term, but it's had a heck of a run, gang. Look at this. It went from the lows of COVID from about 140 and it touched 960 right before Christmas, 970. And it's pulled back a little bit, but it's a interesting company, again, kind of straddling the 100 simple moving average here. You could make the argument that there is some support here, right, where we kind of bounce off this once, twice, three times, maybe the fourth time. We'll see what happens in the future, but I think you could certainly make that case. For those of you who are super, super anxious to get in, I would do something like play the hammer, stop above there, maybe with a stop market down here, something like this. And again, a stop limit means we want the order to go, we want the price action to go in our direction first, where we want the price to cross our line and then we're triggered. Obviously, if we have an order set up like this and we are in this, we have an open order and we don't get filled today, and let's say tomorrow it goes a little bit lower and then a little bit lower, we can adjust our trade. We're not in the trade. We're waiting. We're trying to anticipate this bounce, something like this. And that's where we can use a stop limit order. It's a pretty neat tool and tool bag for the trade desk. Zach Bruno saying he bought TTD at 220. Oh, okay. So you bought it a while ago. Yep. And 225 down here, probably right after COVID time, April, and sold it at 825. Yeah, heck of a ride. Good job. Way to hang in there. It did have some ups and downs along the way. Yep, you held it for a good, looks like 6 months, 7 months, something like that. Does that sound about right? Nice. Yep. Even before COVID, a few years. Oh, so you've held it for a few years. So yeah, 225. It looks like you bought it before, somewhere in if it's 225, if that's the actual level, then that was looks like March was the May was kind of the earliest time frame for that. Yep. So yeah, interesting. Buy low, sell high. And when stocks are going sideways, you guys have probably noticed this, but when stocks are going sideways, I've noticed this, you get like a new break, right? Then it bounces off support, maybe once, usually fails first time, and then continues higher. And you can absolutely use stop limit orders to enter those types of positions, right? Where you want to close above our resistance, retest it, and then jump in maybe the second time, like as it's retracing, as it's trying to continue and gain some steam and go higher. But yeah, absolutely great trade. Looks amazing. If we were to look on short-term moving averages, yeah, just hanging out. Yep. You guys can see lots of traffic, lots of kind of congestion right through this level. And that's what it looked like today. Gap down, went lower, bounced. Sorry on my lines. It looks like it bounced off this level, right? kind of came down again, but you guys can see lots of congestion in this level, lots of buying, holding up rather well during that, during these bounces. But the trade desk looks like it's post earnings. So earnings, it's on the other side of earnings. So yeah, fair game. Okay, Zach saying he entered 518. So that was a good almost 2-year hold, right? Yeah. So a good 20 months or so. Yeah. Yep. Cool. Good job, Zach. All right, next up is Smile Direct Club. This is a Nashville-based company right down the road from us here in Nashville. This is let's take a look on our longer term. Yeah, let's see. Come on, my clicker's not clicking. Come on. Okay, so Smile Direct Club. This has kind of gone all over the place. If you notice this, gang, imagine hitting 21 in September and then being at $4 back in April. So it looks like it's starting to come back alive. Starting to wake up a little bit. If you guys are interested in buying the dip, I had a conversation today with someone and the question came up, how much of a dip is worth buying? What do you guys think? And so I can kind of recommend this, this put indicator, even if you don't sell puts, and because this can quickly give you a bird's eye view of how the stock is doing. In this case, the blue line represents a 10% pullback. The dark green line is a 25% pullback. And so whether or not you actually measure that or whatever, whether or not you actually 10% here, actually I should say, come on, negative 25% pullback. So how much of a pullback is too much? How much is not enough? Do you guys buy 2% pullbacks? Probably not. What about a 4% pullback? What about a 25% pullback? So if those of you who are day trading this right now and you're looking for a 25% pullback on Smile Direct Club for a swing trade, this green line would have been your ticket. So the best way to trade that if you're doing like a day trade is wait for a move lower where we're a little bit away from our green line, which is our 25%. Then intraday, once the price action is down here, kind of near the low of the day, once it's pulled away, you can then literally set up a stop. Set up a stop limit, right? Which means only when the price reverses and goes higher. So this is kind of a swing trade that you would set up intraday instead of like at the end of the day, right? Does that make sense, gang? Where you can wait for the price to move lower during the day, intraday, set up a stop limit and wait for a continue higher. So then it pulled back more than 25%. You're like, okay, I'm going to get in only if it continues higher, put in your order, boom. There you go. I'm not sure that I would do that on this one just because it seems to go all over the place. I don't know that there's a predictable edge that I would see here on Smile Direct Club, except that it just goes like this. So I don't know that I would see anything predictable there, but you can certainly, there's different ways, different strategies that you could use. Let's see. Jean Sebastian is saying 5% just a bit, 10% a good chunk, 20% all you can, 30% remortgage the house. So I think those are okay levels. The thing you have to think about is, like, do you do that all the time, gang? Like on any stock? So like on Fastly, I know some people are feeling some pain from Fastly, even though it closed up a little bit today. But on a stock like Fastly, where did I put it? On a stock like Fastly, this would have been our 10% pullback. This would have been our 20%. And then if you guys are saying you load up on 30%, maybe that's this level. The green line again is our 25% pullback. This is our 10%. And most people ask, how is that measured? Like 10% of what, 20%? And the way it works is it looks at the highest close. So on this day right here, looking backwards, that was the highest close, and it calculates and it says what's 10% below that, and that's where it draws our blue line. And then it's same calculation, what's 10%, I'm sorry, 25% below that, and it draws our green line. Does that make sense? So it just gives you like a heads up, and you don't even need to get out the measure tool. You don't necessarily need to measure that. I mean, that right there is your 10%, right? And then you can also measure your 25%, boom, right? So that's how it works. And the cool part is, even if you don't sell put options, you can use this indicator to judge how well that held. And you can see, like, during this time frame, it holds this level pretty well, and then just kind of falls off, rockets higher, and then falls off. Like, it's kind of all over the place. I like FSLY long term. It is inside of my time capsule. I didn't even look at what this did today. I'm guessing it's down a little bit today in my 5-year time capsule. Depends on the reason for the pullback. Okay. Let's see. Oh, Jean-Sebastian, you're talking about the indexes. Okay, got it. 10% pullback from the recent high. Okay. So Cal, again, it's the pullback from the recent, it's not, it ignores the upper wicks. It ignores it and it looks at the close only, because to me, the close is more significant. And so it's from this level, the highest close, to this level is your 10% pullback. From this level to this level, again, is your negative 25. Mr. Squiggles, wake up. 25% pullback. Yep. Now, those of you who sell put options, selling FSLY is fine. I would not do it at this level because it's below our 200 simple moving average, which is referred to, most traders recognize that as a long-term support, long-term moving average. Things don't always work out well. And you'll see it's been a while, COVID, since FSLY closed below within, regardless of the, if you ignore these most recent days, but it's been a while since it closed below our 200 simple moving average. So, yep. Let's see, Leah, that's when happened to me, loaded up on 89 and it tanked. I actually, you guys want to hear a funny story? So on, let's see if I can replay this. All right, guys, let's talk about volume. What does anybody know about this right here? This volume. It's probably the biggest volume day ever, right? And where the bull, even though it gapped down, the bulls kind of bought it up, correct? True or false? Edward says true. Sammy says true, true, true. Okay, so it gapped down. Now, what happens if it closes below that level? And I also bought a little bit of a pyramid tippy toe right here on this day. What happens if the bulls are wrong within the next few days after, like that? Boom, close below the low. Well, the bull, yes, that's right. The bulls will say, oh, shoot, I timed that wrong. It didn't work in my favor. So what does that mean? Let's say that you sold put options, or you have shares, like a bunch of shares. You obviously are a little bit nervous. Now, obviously, this is not the most, this right here is not the most bullish gap ever. Like, that's one thing. Closing below is like another. Lots of volume here on the volume pinch is another. So what about this? So what I did, literally, I had some shares, and I at the close of this candle, I bought some put options, and we went lower, and we went lower, and you guys know what happened. And then at some point I took I closed the put option for a small gain, and then continued riding it into where we are now. And so on this day right here, I added a collar. So we talk about collars. It's collars, for those of you who trade options, collar is a, you're basically selling on an up day, you're selling an out of the money covered call, because I own the shares. And then you're using that premium. So let's say I sell, let's say a 140 covered call on this day, right? So on an up day, you want to sell a covered call, sold the 140, and let's say I collected, I don't know, $3. And then I went ahead and bought a 110 for $3. I bought a 110 protective put. So if I collect $3 and I spend $3, what is my net cost, gang? 0. So you would say that it was free insurance, right? So now if the stock just goes to zero, I'm protected at this 110, right? This 110 level, right? And literally it didn't cost me anything. The only thing I'm doing is I'm giving away any upside above this level, right? So in this case, my actual insurance, my collar, these put options would be worth more right now than actual shares if I had like a, depending on what the average was, but right, you guys can see how that works. And so like a collar is, it is a little bit advanced, and I'm kind of encouraging you guys not to zone out when it talk. So I'm basically long the shares. I am short calls because I sold covered calls. And then I am long puts, kind of a mixed bag, right? Now, if I don't have any stops set up on this trade, zero, and it gapped down and I have a collar on it, am I going to be able to sleep well at night? Yes or no? Leah. John, yes, yes, yes. Did that perfectly hedge your underlying, or are we still down on your overall position? So great question. So so here's the cool part is your hedge can be worth more than your actual shares as far as the P&L part of it. I posted a screenshot in my mentor group today, a hedge that I put on Pinterest a week or two ago. At the time when I posted it, this is what I did. I sold to open covered call, bought to open 85, and my cost basis is somewhere in this level, somewhere in the 70s, 72, I think. Yeah, so somewhere in this level. So what happens is when things gap down and then go lower, the overall hedge, these puts that I got for free, right? Because I used cash that I collected here and bought them here. So you could say that I plussed some cash here and I spent some cash here, plus dollars, money came into my account here and I spent that money on this, kind of financed my own protection for little to no dollars. And these puts at the low of the day was worth a bit, right? Because the puts are in the money, and we only have a week or two left on the expiration. So at the end of the day, what I would like is, it doesn't matter if the stock goes to zero, I'm still protected at 85. Now, a hedge using a collar doesn't automatically give you dollar for dollar coverage. You will give up some of your gains, obviously depending on when you sold the collar, when you set it up, but it's pretty neat. How far out expiration you use for the collar? So right here, I use, I guess in this case is about 30 days. March 5th is what I have right now. You put all those orders individually in your broker, right? So what I do is I bought the shares over here and I held them. And when they were nicely profitable and on an up day, on a strong up day like this, I'm going to sell a covered call. That's what I did. And then I used that money to finance a put. Does that make sense? It's a little bit of an advanced strategy. Yeah. But you don't really use, when you use a collar, like position trading. I have a video class I taught in November on that. If any of you guys are interested, let me know. I can post that in the chat panel. Let's see, position trading, but it's like a 2 or 3 hour class. Yeah, there you go. There's some study material, but that's the idea. And here's something. Well, I'll tell you what, I'll remind me, team. I got a big list to go through still, but don't want to get off track too much because Matt tends to get off track. But this is kind of what I set up on Pinterest. On an up day, I went ahead and set up a collar. So let me ask you guys a quick question. One, when is the best time to set up a covered call? On an up, to sell a call, to go short calls on an up day or down day? Mike, Jason, Taskia, Ron says up. Okay, what about when is the cheapest time to buy a put on an up day or a down day? So since both of those work on an up day, why not set both of those up on an up day, right? Seems pretty. And so the idea is that you basically are just hedging with options, right? We did a class on that recently, and I'm not using I'm not using stops. And no matter what happens, I'm sleeping good at night. If it goes higher, above the 95 expiration, then the shares will get taken away from me. And I'll still make a good $20+ per share. No one's going to cry for me. If it kind of the May 5th comes and the price action is in between these two strikes, that's fine. My insurance that cost me nothing expires, and I can wait for another update. I can do all kinds of things to set up again. But anyways, that's the idea, is if on an update, you can set both of those up. So a butterfly, I'm not that familiar with butterflies. I know there's a collar is really just two. So a collar is like a three legs of the trade. There's the shares, and then there's the short calls, the covered calls you sold, and then you're long the put. So it's like two option legs, but one stock leg. A butterfly, I believe, is multiple. Yeah. Daniel, I've not got into super collars. Yep. And you do, of course, as Ron pointed out, you want to sell puts on down days. So now that you know, like on up day, I'm going to do this, on down days, I'm going to do that. You don't really even have to even get super stressed about what happens in your portfolio. Like you can hold this stuff for years and keep adding the collars. At some point, the shares will get taken away from you, but you have such a low cost basis. No one's going to cry for you, right? Yep. It doesn't work well for leaps. So there's one little piece you can substitute. So instead of buying actual shares, like at this level, you can buy a leap. So 9-month or more expiration, and same thing on an up day, you can set up a collar. I do that as well. So people call that a poor man's covered call, where you don't actually have the shares, but you got a leap. Obviously, you want to sell your covered call. You set up your covered calls and your long puts in a shorter time frame than the actual leap. So if you have 9 months, you don't want to sell a 12-month, set up a 12-month collar, obviously. So because then you'll be naked after in the 9 and 12 months. So you don't want that to happen yet. Ron says it took a little bit to get over the fear of selling puts on down days. Yeah. Well, here's what's cool is if you're doing the opposite of what everyone else is doing, they're losing their mind, and you're just collecting the dollars. And you have to have big down days for the put sales to really, really work. So like on days like this right here, on days like this, lots of selling, so yeah. Okay, let me try to get back on track here. Where are we at? TDOC. Any other questions, gang? TeleDoc. So I actually went over this in a few different classes, a few different afternoon rooms, but part of what I like to do is I like to set up pyramids on the way down. Okay, so like today when things are selling off, my pyramid actually just barely touched, it didn't get filled on TeleDoc. So I'll wait for that to happen. But what I did on the way down, you want to set up some levels for where you want to buy. So that's what I said, level here, here. And those are obviously just rough drawings. Obviously my orders are a little more specific. But what I want is I want a sell off, and I want to buy 10% of my shares here, 20% here, 30% here, and 40% there, right? So what's 10 plus 20 plus 30 plus 40? 100. That's right. And so I'm just tippy-toeing in. I'm buying a little bit here, I'm buying a little bit more here. Right, and I'm just tippy-toeing in. Now, someone asked me before, they're like, well, how do I hedge? Well, when you first get 10%, you really don't want to hedge. You want it to go lower so that you can get your big chunk of stock at a much better cost basis, right? And then on your up days, then you set up a collar, right? Like what we just talked about. Then you sell your covered call, out of the money covered call. Then you use that money to finance a lower strike put, and you just do that all day, every day. It doesn't take a lot of time. And it's super easy because in Thinkorswim or any of the brokers, you can literally set a column for P&L for the day, and you can look at what is the biggest up day, what's the most significant green piece of your portfolio. And you can look at that and say, well, I'm up X number of R's on Fastly, on TeleDoc, on whatever. And then you can look, just quickly glance at it. You don't even have to look at the chart, and you can then spend some time trying to figure out some levels that you're okay with the stock getting taken away from you when you set up a cover call. Sammy says, Mo, you add leaps on the last legs. Yeah, so you basically add 10, 20, 30, 40%. So it depends on how many shares you want, how much you're trying to buy and set up. Again, position trading, if you guys can scroll up, I have a video I just posted a few minutes ago, somewhere in there. Here we go. Post it again for you guys in chat. There we go. Okay, TDOC. Looks pretty solid. I like TDOC long term. This is in, it's still not loading, is it? It's weird. Load. Come on. You can do it. Does anyone else have problems with FinViz from time to time? So Albert says, do you place stop orders for pyramided orders? No, I do not use stop orders. I do use limit orders for my buys. You may have heard people talk about puke orders. We didn't have enough of a puke for all my stuff to get filled, but you do want some pullbacks, and you don't use stops because you're trying to get the full thing. It's like, you don't want to put brakes on something you want to go lower, right? Because you really want it to go lower so you can get all your shares. Now, if you guys can remain calm and you can add to your position just like your plan would call for, usually it works out well. It doesn't always, but you guys can always have stops, and you can have puts and do other things below the lowest leg of your pyramid. But I like to straddle, as I mentioned, I like to straddle these 100 and 200 simple moving averages. That's what I like to do. Yep. So Jason says, keep calm and trade on. Albert says, no, I meant stop loss for them. Not sure what your stop loss for them. Can you maybe ask the question a little differently? I'll cycle back around to that. Diego is saying, in the case of TDOC, are we saying that the optimal pyramid approach would be between the 200 and so most stocks will, you can look at right here. How old did it go between the two? In this case, it just touched the 100, but not the 200. So that's kind of how I like to do it. So here's what happens, gang. What happens if 3 of the 4 legs are filled and maybe it touches down here and then rockets higher? You're not in a full position, which is okay. You don't really know how low it's going to go. Obviously, if you're in 60% of a position, that's okay. There's plenty of times where my full pyramid didn't get filled, which is okay, right? I'm going to revisit. And so one of the things that I do at the end of the day, right before the end of the day, is I will check my open orders. And I have some orders on Shopify, like at 400. I'm like, probably might as well just close this out because I don't know that we're going to get back down here to the 400 on Shopify. Like, I might as well go ahead and close those orders and free up some buying power, since we're probably not going to get down there. And so that was part of the pyramid that just it never happened. So I revisit that, right? I look at it, and I just decided to call it quits on Shopify getting back down that low. So, yep. So ROKU has had such an amazing run from COVID. What is this? $60 up to $480 last week. I mean, good golly, Moon Lambo. So you guys see the pyramid that I set up. I drew, nothing has gotten filled. So level 1, level 2, level 3, level 4. Most of these stocks, the growth stocks especially, once they get super far away from their longer term moving averages, they're going to come back. I guarantee they will always come back down to the moving averages. The question is, are you willing to wait months or years for that to happen? And that's your personal, it's up to you, right? If you do that or not. So it depends on how patient you want to be. For those of you who decide to chase price higher, somebody bought right here at all-time highs. And today when he woke up, he or she, probably not the most happy camper. Maybe he watched it go lower and then panic sold, right? And so that was quite a pullback, not quite 25%, of course. Let's see. Oh, it's 27. Oh, because it's using the high of the wick. So that's 27% pullback. So imagine owning a stock, a week later, you're down 27%. Are you going to pull the cord and just say, I'm done with it, right? And then look what happened today, intraday. It touched the low, and then it starts to bounce a little bit more. So if you're not, if you're all emotional, trading is going to get the best of you. And you just have to execute your plan. I shared with some people in my group that I saw some red in my account, plenty of red in my account too, even though I have collars on. You don't always get that dollar for dollar coverage of the stock going down maybe $10 a share, and then my collar maybe only gains $7 of value. So there's a little bit of a difference there. But I saw some red in my account. Everybody did. But I didn't go panic and do dumb things. I didn't pay any stupid tax today. I am stupid tax free so far this year. We'll see if I can continue, but I haven't paid any stupid tax so far. So Roku, I like Roku long-term. Obviously you guys can see that it kind of bounced a little bit off this level. So you guys can see lots of activity right through here, bounce off that level. Shocking, right? It's done it before. It'll probably do it again. So that is Roku. Let's take a look on a medium time frame. Look at that, gang. For those of you who are interested in jumping into this, you guys can see there's several green arrows that gave us the buy signals previously. I would personally think about something like this. Wait for a little bit more of a pullback. Obviously, if you set this up today, it would have worked. You would have been in, you would have been up a little bit on your gains. However, we don't really know what tomorrow's going to bring. So if we have a little bit more maybe selling tomorrow, get triggered in and then continue higher. That's my thoughts on Roku. Yep. So yeah, Jason is talking about this. I think you're talking about the gap right here where that went unfilled until it filled today. Yep. Now we'll have to revisit this little gap right here soon, I'm sure. So yep, that's Roku. Next up is your favorite hosting vacation tool, Airbnb. Oh, I thought that was a drawing. That's not a drawing. That's the start of our 50 EMA, a little baby line just developing right there. So looks like a little bit of a, gang, what kind of candle does that look like to you? What does that look like to you? Jason says a hammer. Sammy says Thor's hammer time. MC hammer time. So what would we do? We would actually, we would set up what kind of order would we set up, gang? Maybe something like this. We set up a stop down here. An SL, a stop limit. So we would buy only if it goes higher first. Now here's the cool part. What happens if tomorrow is an inside day? Let's say tomorrow on Airbnb is an inside day candle. What happens? Well, we get a better entry. Then we can lower our entry, right? We can get a better entry. If that happens tomorrow, we'll see what happens. We want to, obviously, if you're bullish on Airbnb long-term, you want the stock to hit your level, trigger you in, and then usually it pulls back and continues higher. So that's what I got for you on Airbnb. Any questions on that one? Ooh, earnings, good call. 25th, Thursday. Ooh, okay. There you go. It does have some bear days. If you guys notice on this day right here, the very first day it IPO'd, this crazy volume. That is the biggest, even by far, like multiples, magnitudes of selling compared to any other selling days. You guys see that? So what does that tell you? It means there's a lot of selling, of course, but if the bears were wrong and it closes above, which it almost did here, right? It went above and then closed. On this day right here, it closed above. So you can say, you know what, close above. I'm going to have my order, wait for it, boom, with some, maybe a stop down here. Okay, we're looking for my toolbar. There we go. Right. So volume pinch. the bears, lots of selling. The bears ended up being wrong about a month later, right? Anybody who's shorted in this level automatically upside down, right? And this next candle tells us, hey, we're probably going to be going higher. But on this candle, if you didn't get in, just set up your order right here and wait a few days. Boom, you would have been triggered in, stop down here. Boom, you guys can see how it played out. Any questions? Jeremy calls it, I call it the volume pinch, just because you can see the highest profile, and you can do that with buying or selling volume. You can kind of get a good sense for where people would be upside down. Yep. And you can do that on different time frames. Mo says overpriced IPO, maybe. Overpriced IPOs can still go higher though, right? Let's take a look at ABNB. Oops, ABNB. Yeah. What is their gross margin? 52%. Is that right? So I guess they count their revenue as the booking fees. That's their revenue. They don't count as like a pass through where they collect the big piece and then send the most of it on. I guess that's how they do that. Yeah. So their sales were down. Obviously, that's a COVID quarter, but it's trading at 30 times revenue. So look at this, gang. 3.63 billion in revenue, and they're losing. So basically, for every $4 they collect, sorry, every $3 they collect, they're losing $1. So they're basically spending $4.6 for every $3. $3.6 they collect. So they're spending more than they're making, which is okay usually for companies that are trying to land and expand in their early years. It's a legit strategy. Companies like Shopify, a lot of companies do that. Tesla did that. Amazon did that. Like a lot of growth companies do that. And it's basically Shopify. I commented Shopify the other day being in the 73 times revenue. And look at that, pulled back a little bit. They're listening over there in Canada. They're listening to what Matt DeLong has to say. So Airbnb. Yep. Any questions? Rent. So Jay says Airbnb has a rent control exit loophole. PPI plus buying multiple homes. What a rent control exit loophole. I don't even know what that means. John Thaxton, yes, negative $1 billion. So you guys probably know, but if you're losing $1 billion a year, one of two things is going to happen. You either have to raise more money, and when you raise more money, you're issuing a secondary round of shares, right? And what happens when someone announces a secondary offering? What happens? Shares go up or down? Yeah, typically goes down. Yeah, because what happens is you say people are getting diluted, right? So you're like, okay, we have a pie and there's 1 million maximum shares out there, right? And let's say ARK Investment owns 5%, okay? And there's 1 million shares out there, and they're like, hey, let's raise some more and let's go from 1 million shares, let's go to 1.5 million, right? So if you go up to from 1 million to 1.5 million shares, is your original 5% still 5% of the company, 5% of the shares? No, it's a lower number, right? Yeah. And so here's another question, gang. When is the best? When do you see companies doing secondary offerings, at highs or lows? Great question. Sean says lows. Shawnee says low. Nope. So here's the thing. You want to raise money before you actually need it, right? So this is probably not the best time. In this case, obviously, Airbnb was only out 4 days. So you're like, well, what did you do with all the billions of dollars we gave you 4 days ago, right? Usually on highs, usually on all-time highs or near highs. Companies that are raising money on lows, usually there's a bigger problem. Imagine like Airbnb goes down here to 130, like lows, that's not the best time to be raising money. Not the best time. However, if they have to do that, that's kind of a warning sign, right? It's like trying to get a loan when you've maxed out all your credit cards and all your credit score is just shot. That's kind of what that is. And it's not the best not the best time to do that, right? Okay, let's take a look. LLC did that yesterday. Oh, CCL, right? Got it. Let's take a look. See CCL Carnival. Yeah, so at all-time highs, or at not all-time highs, but at highs, they raise some money. And again, you're not going to be burning $1 billion a year without raising some serious dollars to keep financing that machine. Yep. Let's take a look at open. I got to fly. Geez, look at my list. I'm halfway through. Not even halfway through. All right, gang. Let's roll through. Open Door Technologies looks solid. Looks like it's holding up the 50 EMA. For those of you who are interested, I would do something like this with a stop limit, buy above stop market, something like that. Looks solid. You can also make a case for, you had several kind of pivots in this area, so looks like a decent buying opportunity. X kind of chopping around. Certainly nothing wrong with opening an order. I would do something like this with a stop down here. Click the button. Maybe something like this. Stop market down here. Limit buy here. Something like this. So we're waiting for the stock to, which obviously if you had that open today, you would have been filled and profitable. However, we are at the end of the day looking for a move, something like that. Next up is GK's. Is this gold? Yeah, I would not touch that. Oh my goodness. So it's kind of making lows, kind of COVID. No, sorry, my stop sticking. So COVID lows, sorry, it's not quite COVID lows. COVID lows are there. Doesn't look super, looks like it's slowly trending lower. To me, I would not do anything with that. Walmart earnings came out. Now, what do you guys notice about this volume on earnings? If I look to the left, I don't see any other selling volume that has that much, like in a while. I don't see anything. You guys see anything? So to me, that means I'm going to give it a few days to chill out. I typically like 3 or 4 days for it to chill out, see what happens. Obviously, you want to buy as low as you can. If you're super uber bullish on Walmart, you can certainly draw some lines, some levels, wait for a little bit more of a dip to buy on Walmart. And this pretty gnarly gap down from a white candle gapping down was a bearish gap and go. Yeah, pretty gnarly. I would let this kind of chop around, go sideways before continuing higher. Okay, next up is GoDaddy. Anyone like GoDaddy? Let's take a look on our long-term moving averages. Yep, it's holding up well. So those of you who are interested, as I mentioned, building a pyramid, this it looks like it could have touched like both simple moving averages in a single day. It didn't quite do that, but I would be looking for on this hammer kind of a break above with the stop down here, a little bit below the 200 simple moving average. And again, we're using a stop limit to jump into that. Jonathan Wage is a reluctant customer. A reluctant customer. Do you buy your domain names, Jonathan, from GoDaddy? That's where RLT does. Yeah, that's really the only thing we use from GoDaddy is domain parking. Next, AMD. Ooh, look at that. Looks like a good opportunity. Lots of selling volume over here. Yeah, I would say that's a solid. You guys can see a little bit of a support level here. I would do something like this. Support. I'm sorry, a limit buy here, stop market here. And when I go over these, gang, you can easily set these orders up if you're watching the videos, you can easily set these up. After hours, just walk away, let them do their thing. And when I set up swing trades like this, I will set up the whole order, the target, everything, and just put it all in a single order, push it through TD Ameritrade, and let it do its thing. Yes, Jolene, these are always sent out. All the recordings for the afternoon rooms are sent out. Okay, next up is GRUB Hub. You guys can see it bounce off this level a little bit. I would hold off on this just because it's below its 200 simple moving average. And this is another kind of gapping below. It did gap down today and faded a little bit. I would hold off on GRUB Hub just a little bit longer. On these gnarly gaps, again, I like to wait 3 or 4 days, see what happens, let them chop around a little bit, let them kind of whipsaw other people in, and then decide if you want to get in. Nothing that I see there on Fiverr. Ooh, look at that, ladies and gentlemen. It doesn't get any more bullish looking than that. Look at that. Going parabolic. Moon Lambo. So stop above, I'm sorry, stop limit entry above, stop market, something like that. I could see that. However, if you're not comfortable with that, you can always do a limit buy halfway down this candle with a stop. Well, there's this to contend with, something like that maybe. But yeah, lots of opportunities to buy the dip today, gang. Let's take a look. Fiverr. Let's see. Okay, yep, there you go. Pulled back more than 25%. Look at that. Look how well it continues. It continues to make new highs, close new highs, close new highs. That stair step pattern, right? This blue line, the green line, always inching up, inching higher. Okay, next is BABA. Ooh, this is one I don't personally trade. I used to years ago. The whole China thing is a little iffy right now in my mind. I don't know what's going to happen with the new U.S. administration relations with China. We'll see how it plays out. But closing below the 200, we'll see if we can reclaim that 200 first. You guys see that we closed below and hung out for a little while, held above, and then went back below again. So I would hold off on this. If you are interested in selling put options, obviously today would have been a good day to do that. Something to do that. Jason said he managed to sell a 280 covered call for 1% premium. So he sold the 280 covered call. Yeah, ideally, gang, on covered calls, you want like a strong update. I assume, Jason, you had shares already, so you kind of rode this down today, and then you sold the covered call today. Yeah. So ideally, the best time to sell covered calls is on an update. Now, this gap down, and obviously compared to the previous close, still was a down day. Not a ton, but it did reclaim some ground. And ideally, on a strong move up like this, on a candle up here, maybe above some of this level, would have been a good time to sell. Maybe out of the money, maybe a 300 strike covered call. But yeah, well played. 1%. Yep, lots of trades, lots of opportunities out there. What in the world? Hewlett Packard, are they still around? So Hewlett Packard, let's see. You guys can see there's some levels setting up that are here, kind of at the $9 level. I've seen much better. You guys can see the stair stepping means we're not making new highs and we're closing lower up until this level, till the beginning of the year, and we're kind of going a little bit higher. Let's see, long term, what does it look like on weeklies? It's okay. Not super exciting. ATVI, another Activision, another RLT favorite. You guys can see how well it's kind of following, kind of buying the dips, works well. Again, I would wait for at least a little bit more of a dip to buy. If you buy a tiny dip and it makes a big move lower, you're going to regret buying that tiny dip. You need to, in your trading plan, you need to have how much of a dip is acceptable to buy, how much of a dip is too much of a dip, how much do you know, if a stock gapped down to here, if it gapped from the close of yesterday all the way down here, is that too much of a gap, too much of a dip? Something to think about, something to put into your plans. ATVI looks very bullish. I would wait for a little bit more of a dip before I buy. Obviously, you guys can see a level right through here that it would have worked well. Buy here, maybe a stop below our 200 simple moving average. Next up is Apple. Apple putting in a lower wick. I know several RLT traders put in some put sales, got some put option premium collected today. Good job on that, gang. Looking around the 100, 105 strike price on Apple. Obviously, if you don't have shares, you can sell puts and lower your cost basis. In this case, it looked like it held up well with all the selling today. We'll see what happens over the next couple days and weeks on Apple, but it is a RLT favorite. You guys all know Jeremy's story about Forrest Gump, how Lieutenant Dan, they bought some fruit company, never have to worry about money again, right? Yep. Let's see. First Solar gapping down, black candle gapping down. It looks like the bulls fought back a little bit of an extended volume on First Solar. I mean, you guys can see it kind of did a previous pivot. Maybe if it goes this low again, maybe set up something like this where we're going to do a limit buy, which is a little bit lower than half the candle. And stop limit down here, which is below our 200 simple moving average. So we would want something like this. We'd want, I'm not even sure if it's going to happen again. Obviously, we may or may not get some more selling tomorrow. But for those of us who have pyramids and collars, whatever happens, happens. We're not going to get stressed, but maybe it comes down a little lower before it continues higher. Yep. Oh, yes. And good point, Mike. February 25th. So Thursday. Earnings. Yep. Okay. Next up is VISL. VISL. What in the world? Look at that green line, gang. What in the world? Electronic technology telecommunications. Where'd my screen go? I don't know what to recommend with this. Obviously, there's some kind of a base, a support kind of coming in here at the $1.50 level. This is it is now almost a penny stock. Personally, I wouldn't do anything with this. If you want to set up some pyramids and buy some shares, it's so cheap. You can certainly straddle, kind of step over and the two moving averages there, but nothing I don't really see anything setting up on that. Obviously got a couple early signals months ago, but yeah, nothing. I don't see anything there. BDX. So we're just chopping around, just hanging out. So if you missed the hammer from the previous day, so Monday's candle here. If you missed that, you can get a second chance to stop limit buy with a stop market order down here, something like that. Obviously today would have triggered in. However, if you missed it today, you got a second chance to get in. See what happens. Obviously you don't want to get triggered in and then it just goes lower and you lose an R. But ideally what would happen is it continues higher, maybe pulls back a little bit, retests a little bit, and then continues higher. That would be, I think, the ideal scenario on BDX. Next up is PG, Procter & Gamble. It is in a downtrend. If you guys can, come on. Mouse. It is in a downtrend. Our 50 EMA is above our 10. So it is kind of going down lower, continuing lower. I would not personally buy this yet. You guys, I would wait for something like this. I don't know where let's see where our long-term moving averages are. Yep. So we're below our 200 simple moving average. Again, if you close below the 200 simple moving average, look out below, up work. Look at that. That looks a lot like Fiverr, doesn't it? Almost identical. Yep. Oops. UPW. Look at this. Look at this. Gap down. goes a little lower, then the bulls fight back and push it higher, where it closed green on the day. Look at that. So at some point in the day, we were down 15% on the day, and we closed green. I don't know. That tells me I'd be a little more bullish than bearish on something like that. Great. Upward. I don't really see any specific patterns, but if you're interested, set up a something like this, maybe, where you have a stop market order down here, and you're just going to limit buy. You're going to want, obviously this would have worked how you set it up today, but a limit buy at this level. We didn't have today's candle to even know to look at that. So limit buy, something like that, maybe $8 of risk, something like that. Fastly, one of my favorites currently. Dumpster fire. It is fighting back just a little bit right through here. Fighting back just a little bit. Do not sell puts if you are below the 200 SMA. However, if you have put sales, some of you, I got messages that you were awakened to this gap down. You had lots of put sales on Fastly. Fastly, I like long term. However, I have some some collars set up on this. So no matter what happens, I'm protected either way. But Fastly is one to watch long term. With this volume right here, if we close above this 88 level, I would expect to continue higher, maybe pull back and then continue on. So again, that's if we close above this 88 level because of this volume selling, like the most recent selling on February 18th. So this is the day after, so right after earnings. Yep. Next up is OZON. Geez, Moon Lambo. Is that right? $4,800. Interesting. Not really looked at this one before. Yeah, you guys can see the S curve. Buy the dip. Obviously, you need to think about how much of a dip is buyable, how much is ignorable. There's not enough. We don't have enough history for long-term moving averages. OZON, we're kind of close to recent highs. I don't know that I would do it. That's my stock son, says that's my stock son. OZON. Yes, it's the Russian Amazon. Okay. The Russian Amazon. Huh. That's cool. The Russian Amazon. So does Amazon deliver in Russia or no? Or is the Russian government, you're not good enough to come to Mother Russia? Okay, look at this hammer, gang. Look at that thing, stands out like a sore thumb. Break above Moon Lambo. So I personally, I would wait for this to pull back, maybe get some kind of 4,004-ish level. Hoff, you sold, I think I told you to sell somewhere on one of these 2 days. Yeah, and you're glad you did. Obviously retrace, continued higher. No, but amazing as it talks with them. Okay. Got it. All right, gang. I see. You guys crack me up. Okay. So ICLK, ICLK Interactive. Looks very, very tempting. You guys notice a certain candle right here. We're going to set a stop limit buy. I don't really see anywhere to put a good spot for a stop. So I mean, a good spot would be way down here, but that's a terrible risk reward. You'd have to get up to $25 to get to our for ICLK, but something like this would probably work. We'll keep our eyes on it. Let's see, stop limit. How do you guys set your stop limit buys up? Do you give it a couple cents? Like some people will set it like that, which is you really want it to break the high. That's typically how I do it. Something like that. Let's look at it on hourly. Yeah, something like that. So if we go higher, we'll probably have another S curve. So something like this could happen where it pulls back, continue higher. Not quite exactly like that, Mr. Squiggles. Let's try again. Something like that. Yeah. Okay. Says I click 3 more ENPH. What happened to my chart? There we go. Whew, look at this. So have you guys ever noticed that on candles, I think about how it closes. And in this case, almost a shaved top, not quite, but a shaved top. It closes in the top half, top 25% of the candle. I don't know about you guys, but that's a little bit bullish to me. Obviously, you have different levels that you can buy off of. It bounced off the 100 simple moving average, continued higher. If you are not in this, certainly kind of buy maybe halfway through this bullish candle if you get a second chance with a stop below this level, something like this. We're gonna do a limit buy because we want the price to come down first with a stop market share. Next is MPC. Nothing to do there. You guys do not want to chase that higher. Do not want to chase that higher. I don't know if these energy companies, it's probably because of the pipeline project got shut down. The production of oil is getting squeezed. Demand is, the supply is reduced. Demand about the same. Same thing here. I don't know that I would buy these unless you're waiting for a set up an order for some kind of a pullback first. I would not buy the all-time highs. Recent highs. I would not do that. Do not recommend that. You do not want to chase price action higher. You will feel like a little bit of a racquetball bouncing off. You're running full speed towards the wall. The racquetball bounces. You run into the wall. Oh, look at that. Crazy. Let's look at the weekly. All over the place. Whew. Jeez. I don't know. Not my thing, gang. Crazy. Okay. ET. Okay. So tell me, hit me with the stocks that you would like to look at tomorrow, Energy Wednesday. Let's hit me. MLP is a tax nightmare. Okay. NEO. BE, EXPI, DK, NG, Hubs, Space, Yeti, Upwork, DMTK, BNGO, STX, FireEye, FUYE, MGNI, some of never heard of, BILL, AYX, SDC. Did anyone learn anything with any takeaways today? I apologize for going over time. I wasn't expecting to have 70 stocks to review. Shopify. Cool. Glad you guys learned something. Let's see. Did I miss anything? MGI, FireEye, STX, PGF. Heavy space. Okay. So Patrick is saying good tokens plus extended not set up on my TOS. We'll set it up. PLTR. Craig Turner learned a lot about when to buy calls and puts. Yeah. You really want to do it. You want to buy calls and puts at a time when the price action is moving the opposite of what everyone is doing, right? So you want to buy puts on an up day when you don't need to. Right? That would be the cheapest way to do it. Yeah. Upwork, up a lot after hours. 60. Oh, it's way up here. Ooh, earnings. Yep. Well, our limit buy probably is not going to get filled then. We'll take that off. Yep. Yep, up is cheap for puts. Yep, cool. All right, gang, thanks so much for your time. I appreciate it. Yes, sir. Thank you, guys. I will be hosting tomorrow, so you get to hang out with me actually the rest of the week. So don't forget to love life, live life, and trade it. You guys rock. Have a good evening. Stay safe.